Hey everyone, welcome back. We're diving into the real estate investor's playbook today.
Yeah,
And we're really going to try to excavate the good stuff
right.
and bring it to you guys.
Absolutely.
So jumping right in, um,
Let's do it.
real estate, why is it considered this like powerful wealth building tool? I
Yeah.
mean, everyone's heard the saying, they're not making more land.
Right.
What's the...
It's true though.
It's true, yeah.
It is true.
It's true.
But it's more than that. I think it's there's something about having a tangible asset
Mm-hmm.
that you can touch and feel
Right.
but I think what really makes real estate so compelling is the appreciation potential
Okay.
and the multiple income streams that you can get from it.
Okay. Explain that a little bit more.
So you buy a property.
Yeah.
Not only can it increase in value over time,
Right. Yeah.
but you can also generate rental income from it.
Right. So it's working for you
Well,
while...
it is. It's like having your money work for you while you sleep.
That's the dream.
That's the dream.
Yeah, early retirement.
Everybody wants passive income.
Yeah, exactly.
That's the holy grail.
And it's not that simple, is it?
Well, you're already catching on here.
Okay.
I think it's really important to debunk the myth
Okay.
that real estate is some get-rich-quick scheme,
Right.
because it's not.
Mm-hmm.
It takes work.
Yeah.
It takes knowledge, and it definitely takes a solid strategy.
Right. So no magic shortcuts.
No, you got to put in the work.
Makes sense.
Yeah.
But let's talk about something that does sort of sound like magic.
Okay.
Leverage.
Leverage.
Yeah.
The book dedicates a whole chapter to that.
Yeah.
Yeah. And there's a good reason for it.
Can you break that down for our listeners?
Yeah, leverage is a really powerful concept that can really amplify your returns in real estate.
Okay.
But you got to use it the right way.
Mm-hmm.
So picture this. You want to buy a rental property.
Okay.
Costs $200,000.
Okay.
Now, you could pay for the entire thing up front, but most people don't. They use a mortgage.
Right.
So let's just say you put down a 20% down payment,
Okay.
which is $40,000.
Mm-hmm.
So you're essentially controlling a $200,000 asset
Wow.
with $40,000 of your own money.
That's incredible.
That's like leverage.
So you're using
Yeah.
other people's money to control an asset,
In a way, yeah.
to amplify your return.
Exactly.
Okay.
But here's the thing, leverage is kind of a double-edged sword.
Oh, how so?
So while it can amplify your gains, it can also amplify your losses if the market takes a downturn.
Oh.
So you got to be careful.
So there's risk involved.
There is risk.
Okay.
So knowledge is power.
Knowledge is power. That's why we're here.
Exactly. And that's why people should read the Real Estate Investor's Playbook.
Absolutely.
Okay, so let's talk about some of the different approaches that they recommend in the book.
Yeah.
What are some of the key strategies that really jumped out at you?
So one of the most popular strategies, and for good reason, is investing in rental properties, which makes a lot of sense because you're looking to generate that consistent cash flow. Right. So you're buying a property and you're renting it out.
Exactly.
Okay. And then hopefully you're making money from the rent every month.
And that's the dream, right?
Yeah. But what's the catch?
What's the catch?
It can't be that easy.
You're right. It's not just a set it and forget it type of thing.
Okay.
You're going to have some responsibilities.
Right.
So you got to screen tenants. You got to be able to handle those maintenance requests.
Mm-hmm.
And it's also really important to understand your legal obligations as a landlord.
Okay. So it's not just about collecting rent checks every month.
No, it's not passive income completely.
Okay.
It's semi-passive.
Right.
You have to put in a little bit of work.
Okay. Got it.
And the book really stresses the importance of positive cash flow.
Okay. What does that mean?
What does that mean? So positive cash flow means that the rent that you're collecting
Yeah.
is enough to cover all of your expenses every month.
Okay.
So that includes your mortgage payments,
All
your
right.
property taxes, insurance, any maintenance costs.
Mm-hmm.
Ideally, you want money left over at the end of every month.
So it's not just about hoping that the property is going to appreciate in value.
Well, appreciation's great,
Yeah.
but it shouldn't be your only strategy.
Okay.
You need that cash flow
Yeah, to keep things
to keep things afloat.
afloat. Exactly.
Yeah.
Okay, so steady income, potential for appreciation. That's great for rental properties.
Right.
But I know some people are looking for something a little bit more fast-paced, a little bit more exciting.
Right.
You're talking about house flipping, right?
Yeah.
Buy low, renovate, sell high. Exactly.
The glamorous side of real estate.
Yeah, exactly.
Yeah.
So what are some of the things that trip up people who are trying to flip houses?
Well, it can be incredibly lucrative,
Mm-hmm.
But this is not for the faint of heart.
Okay.
It takes a lot of work,
Right.
and it takes a certain skill set.
Okay.
You know,
Yeah.
you really got to know what you're doing.
Okay.
You got to have a deep understanding of the local market,
Mm-hmm.
and you got to have a really high tolerance for risk.
Okay, what kind of risks are we talking about here?
Well,
Besides, obviously, like putting a sledgehammer through the wrong wall.
yeah, that's always a risk.
Yeah.
But
Hopefully that's not happening.
hopefully not.
Yeah.
But really one of the biggest pitfalls is underestimating renovation costs.
Yeah. Okay, so how do you avoid that?
So even experienced flippers
Yeah.
get caught off guard
Right.
by, unexpected repairs,
Mm-hmm.
hidden problems.
Mm.
You start opening up walls and you find
Right.
you need to replace all the plumbing
Yeah.
or material prices increase suddenly.
Yeah. So that contingency buffer that they talk about in the book,
Yeah.
that's essential.
That's essential
Okay.
because you need to have that cushion
Right.
because you never know what's going to come up.
So due diligence is really key here.
Due diligence is key.
Right.
You got to inspect the property.
Mm-hmm.
You got to get multiple quotes from contractors
Right.
and really try to anticipate any
Huh.
potential problems.
That makes sense.
Yeah.
So high risk, high reward.
Yeah, I'd say so.
Definitely not for everyone.
Not for everyone.
Yeah. Okay, so what about those of us who like the idea of real estate investing,
Yeah.
but maybe we're not ready to be landlords and we don't want to get our hands dirty with renovations?
Exactly.
Is there something else that we can do?
Yeah, there's definitely some alternative paths out there.
Okay.
Have you ever heard of wholesaling?
Wholesaling. I feel like that's something you do with groceries.
Yeah, like bulk buying.
Yeah.
But you can actually wholesale real estate.
Okay. How does that work?
So essentially it involves finding those deeply discounted properties,
Okay.
often from distressed sellers,
Mm-hmm.
and then connecting those sellers with buyers who are looking for a deal.
Okay.
So you're essentially middleman.
So you're not actually buying or fixing up the property.
Okay,
You're
yeah.
just connecting the dots.
You're connecting the dots.
Huh.
And you're profiting
Okay.
by getting that property under contract at a low price
Yeah.
and then assigning that contract to another investor for a fee.
Okay.
That's wholesaling in a nutshell.
So that sounds like you need some pretty serious negotiation skills for that.
You definitely need some good negotiation skills.
Okay.
You got to have that knack for spotting those deals.
Right.
You got to be able to build relationships with both buyers and sellers.
So this is for people who are maybe a little more comfortable with the deal-making side of things?
Okay, so
Okay.
Yeah.
But maybe they don't have the capital or the desire to actually manage the properties.
exactly.
Got it.
Yep.
Okay, cool. What about REITs?
REITs.
Yeah, everyone always talks about REITs.
Real estate investment trusts.
Yeah.
Yeah, those are a great option.
What is that?
So think of REITs like mutual funds for real estate.
Okay.
Instead of buying individual properties,
Yeah.
you're investing in companies that own, operate, or finance income-producing real estate.
Sure, you're diversifying your investment.
You are.
Okay.
Across a whole portfolio of properties.
And it's managed by professionals, so you don't have to do anything.
Exactly.
Okay, that's good.
And one of the biggest advantages is liquidity.
Okay.
Unlike owning a physical property, which can take a long time to sell.
Right.
You can buy or sell REIT shares, just like stocks.
Oh, okay, so it's very easy to get in and out.
Exactly. Very liquid.
Okay, got it.
So that's a big plus.
Yeah, for sure.
Yeah.
Okay, cool. What about this whole Airbnb thing?
Oh, yeah.
Short-term rentals.
The short-term rentals are huge right now.
Yeah, and the Real Estate Investors Playbook talks about that too.
We do.
So is that a good strategy?
It can be.
Yep.
It can be a great way to generate a higher rental income
Yeah.
than you would with a traditional long-term rental.
Right. Because you can charge more per night.
Exactly. You can charge more per night,
Right.
but you're also going to have more work.
Yeah, more work.
You got to manage those bookings.
Right.
You got to communicate with the guests,
Mm-hmm.
make sure the property's clean,
Right.
maintained between stays.
I was just going to say, what about cleaning and stuff?
Yeah,
So
exactly.
you have to think about that.
You have to factor that in
Yeah.
when you're trying to figure out if it's actually profitable.
Okay.
Right.
What about local regulations? What if...
That's a big one because a lot of cities and HOAs are cracking down on short-term rentals.
Yeah.
So you got to do your homework.
Right.
You got to research those zoning laws,
Okay.
permit requirements,
Mm.
HOA restrictions.
Right.
All that stuff can really impact
Yeah.
your ability to operate legally and profitably.
So many different things to think about.
There are a lot of options,
Yeah.
and they all have their pros and cons.
Wow. It really seems like knowledge is power in this game.
Knowledge is power.
Yeah. You really need to know what you're doing.
You do.
All right. So we've got house flipping. We've got wholesaling. We've got REITs. short-term rentals.
Yep.
So many different ways to get into real estate investing.
It's a diverse market.
Yeah.
A lot of opportunities.
Okay, but no matter what path you choose, there are some universal tips for success.
Absolutely.
So let's dive into the secret sauce next.
Okay, so we talked about a bunch of different real estate investing strategies.
Right.
From being a landlord to flipping houses
Right.
to REITs short-term rentals.
Yeah.
But like we've been saying, knowledge is key.
Absolutely.
So the book really emphasizes this idea of continuous learning.
Right. It's not just about reading one book.
Right.
It's about constantly trying to learn and stay ahead of the curve.
So how do you do that?
Well,
How do you stay ahead of the game?
one thing you can do is look for local real estate investment clubs
Okay.
or online forums.
Yeah.
Where you can connect with other investors,
Mm-hmm.
share experiences.
Learn from each other.
Exactly. Because
Okay.
they've been there, done that.
Yeah, that makes sense. And, don't underestimate the power of mentorship.
Oh, yeah.
Finding somebody who's already doing what you want to do
Yeah.
can be a game changer.
Right.
They can offer guidance support,
Yeah.
real-world wisdom that you're not going to get from a book.
Mentorship is huge.
It is.
Yeah. Okay.
Okay.
Now,
Okay.
I know a lot of people think you need a ton of money to get started with real estate.
Right.
Is that true?
You don't have to be a millionaire
Okay.
to get started.
That's good.
The book actually talks about starting small
Okay.
and scaling up gradually.
So start with something small.
Exactly.
Get your feet wet.
Learn the ropes.
Yeah.
Make your mistakes early when you're not risking as much,
Right.
and then you can scale up as you gain more experience.
That makes sense.
Yeah.
Okay. I want to talk about this phrase that you always hear in real estate. Location, location, location.
Ah, yes.
Is that still true?
It is still true.
It's not just about finding a house on a nice street.
There's more to it than that.
Okay.
You really need to understand the market.
Okay.
Like what's going on in that neighborhood?
Right.
What are the demographics?
Mhm.
What's the job market like?
Okay.
What's the growth potential?
Yeah. Is it a good area?
Exactly.
Are there a lot of crime?
You want to know all that stuff.
Right. So you need to do your research.
Yeah. Research is key.
Okay.
Don't just buy something because it looks pretty.
It's all about looking beyond the surface.
Exactly.
Okay. Got it.
Yeah.
Okay. So we've got education,
Yeah.
mentorship,
Mm-hmm.
starting small,
Yep.
knowing your market.
Absolutely. What else?
Give me some more golden nuggets.
Okay, well, we got to talk about the numbers.
Ooh.
I know nobody likes talking about the numbers,
Yeah, that's the boring part.
but it's important because
Yeah.
you got to make sure the deal makes financial sense.
Okay. So
Yeah.
don't get caught up in the excitement.
Don't get emotionally attached to a property.
Okay.
Run the numbers, make
Yeah.
sure it makes sense for you.
Got it.
Yeah.
Okay.
Yeah.
What about patience?
Ah, patience.
Everyone wants to get rich quick.
Of course.
But is that realistic with real estate?
Real estate is a long game.
Okay.
It's a marathon, not a sprint.
So no get rich quick schemes?
No,
Okay.
it takes time.
So be patient.
Be patient.
Don't try to time the market.
Exactly.
Okay.
Just find those solid investments and hold on to them.
And weather the storms.
Weather the storms, exactly.
Because there will be storms.
There will always be ups and downs in
Yeah.
the market.
Okay.
But if you're patient
Yeah.
and you've got those good investments,
Mm-hmm.
you'll be fine.
It's like planting a tree, you said.
It is like planting a tree.
You don't get fruit overnight.
No, you got to nurture it.
Yeah, you gotta water it.
You got to give it time to grow.
Okay, I like that analogy.
Yeah,
Okay, so we've talked about a lot of great stuff,
we have.
but let's talk about some of the common mistakes that people make.
Okay.
What are some of the pitfalls to avoid?
Well, we talked about it a little bit, but over-leveraging is a big one.
Yeah, taking on too much debt.
Too much debt too fast.
Okay,
You can get caught in that cycle of refinancing,
right.
and then suddenly the market turns
Yeah, and you lose everything.
and you're in trouble.
Okay, yeah, that's scary.
It is.
Well,
Underestimating costs.
Yeah.
That's a big one.
Yeah, like those hidden costs that you don't think about.
The unexpected repairs,
Yeah.
property taxes, insurance.
So budget for that stuff.
Budget for it.
Okay.
And then finally, don't get stuck in analysis paralysis.
What does that mean?
So that's when you're doing so much research
Okay.
that you never actually take action.
Oh, so you're just stuck.
You're stuck.
Yeah.
You're just thinking about it too much.
Yeah.
You're waiting for the perfect moment.
Right, but there's no such thing as the perfect moment.
Exactly.
So just go for it.
Sometimes you just got to take action.
All right. The Real Estate Investor's Playbook.
Yeah.
What a great book.
It is a great book.
Tons of actionable advice,
Absolutely.
real-world examples.
Yep.
This book really does give you a roadmap for success
It does.
in the world of real estate investing.
Absolutely.
It's been so fun talking about this with you.
Likewise.
And with all of you listening out there.
Yes.
Thank you so much for joining us on this deep dive into the Real Estate Investor's Playbook.
Until next time.
We'll see you guys next time.